what is the order you should invest in? With all this craziness going on surrounding Robinhood and GameStop and Wall Street bets, it's really easy to forget that in order to maximize your taxable advantage, there's a really specific order you should invest in, and that's what I'm going to go over in this video. So the first thing is, if your employer offers a 401k or a 403 or a 457, then you should do that up to your employer match. Lots of employers will give you up to 5%, 6% match, and if you're not taking advantage of that, you absolutely should, because that's essentially free money. The second one on the list is your Roth IRA. Now, if you don't know what a Roth IRA is, it's one of the best ways that you can take advantage of the U.S. tax system. You put in money now, and whatever you gain on that investment is not taxed when you withdraw it at retirement age. As long as you withdraw it at age 59 and a half, you can invest it within index funds, you can invest it in stocks, you can invest it in pretty much anything you want, but anything you gain on that investment is not taxed. And you can contribute up to $6,000 a year to this, but you have to wait till you're 59 and a half, retirement age. Otherwise, the government hits you with this huge penalty, and you don't want that. Number 3 isn't available to everybody, but if you have a health savings account, it's one of the best kept secrets in finance, in my opinion. What you put in is not taxed. What you take out is not taxed, as long as it's for a healthcare expense. And what you gain on your investment within that account is not taxed. So essentially what it is, it's like a 401k for healthcare expenses. The limits are just lower what you can contribute. I'm not going to talk too much about health savings accounts. I actually have a whole nother post on them, so go check that out if you want more information. But essentially what you need to know is it's a way to save for healthcare expenses in a tax advantage fashion. So for number 4, we're going to go back to your 401k. You already contributed up to your employer match, which is great. So now what we're going to do is we're going to take you up to the IRS mandated limit, $19,500. So for our 5th and final step in the order of investing, we're talking about your taxable brokerage. So this is your Webull, TD Ameritrade, E-Trade, Fidelity, whatever investment brokerage you want to use. That's what we're doing with whatever money you have left over. And the reason that one is last is because the government will hit you with what's called capital gains tax if you're investing outside of any of those tax advantaged accounts. Capital gains tax can be anywhere from 15 to 20%, and that's if you hold any stocks that you bought longer than a year. If you hold it less than a year, it's actually taxed as regular income, which can be much more than 20%. Within your taxable brokerage, I always recommend 80% of your portfolio is in index funds, and then the other 20% you can dabble in individual stocks. Sorry for that post being a little bit long-winded, but order investing is important and it's a lot to cover. I know it's a lot of information. If you have any questions, feel free to reach out to me. I'm very responsive. I love helping you guys out. I'm also going to post the older Instagram post that I had on this exact topic to my story. It has all the information I just talked about contained within it. So that's going to be on my story. You can also find it just by scrolling down and finding the post in all of my regular posts. Thanks for listening, guys, and again, if you have any questions, please let me know.